Good afternoon. This is Adam Tuiaana with FCOJ-A Futures in Chicago, coming to you the afternoon of Wednesday, April 24th, 2013, reporting your commodities, your soft commodities markets. Specifically today we're going to talk about cocoa and cotton. Cocoa last traded $23.30, that's $2,330 per metric ton. That's in the July contract, which actually puts cocoa up 3 ticks on the day, but pretty much even. And that sideways market is pretty much indicative of what cocoa's been doing over the past few days. It's been kind of a pretty boring market to watch. However, we saw some strong U.S. equities markets. In addition to that, last week on Friday, we saw the grinding totals for North America come out, and they were actually pretty supportive. They were pretty bullish. So a lot of demand. That showed us that there's a lot more demand coming out of North America than there was in the Eurozone earlier last week. So at the same time, there's been some counterbalancing fundamentals, which is kind of why we're getting the sideways market in cocoa for the time being. Coming out of West Africa, which is a huge growing region for cocoa. It's been reported some pretty good weather, more rain forecasted, more cooler temperatures, which will help to, of course, produce a better harvest for cocoa in the long term. So that's where you're kind of getting some sideways market. Upside, for the time being, I think it's got some upside. I am pretty bullish, but I'm long-term bullish with some call spreads in the July contract. You may want to consider those. Upside resistance for cocoa is 2,400, while the downside support level is going to be 2,300. Moving over to cotton, which last traded at 83.09, puts cotton down on a very big day down, 199 at the time that I'm filming this video, and that's in the July contract also. There's been some very large, in fact massive long liquidation, people taking profits that were long. It's been basically a free fall in the cotton market. There was a huge miss yesterday on the China PMI. So basically that shows a lot of weakness there. It is pretty bearish. So inversely, we saw the U.S. dollar rally pretty sharply yesterday. We also saw the S&P, which was up about 16 to 17 points yesterday too. So inversely, a lot of that money seems to be flying out of cotton and finding a home elsewhere. So the support level, which was critical in cotton, was the 8,500 area, or 85. Cotton last traded 83.09 again. So it's violated that 85 area pretty convincingly, trading very comfortably below that area right now, which is bearish near term. Downside support, which I think will get visited pretty quickly here over the next week, is 82.22, while the upside fight for life resistance is going to be somewhere around 86.20. So keep those in mind. I did have on a side note, I had a couple viewers reach out to me and just ask if I can kind of explain a couple things in plain English. One of the questions was, what is bullish and bearish? I hear you talk about bullish and bearish. So real quick, I'm just going to explain what those are. Bullish, you think that the market's going up. Bearish, you think that the market is going down. A good reminder, a good way to remember this is that when a bull attacks, it's going to go forward. It's going to try and gore going upward, whereas a bear is going to swipe down with its paw. So if you keep that in mind, that's how you can easily remember those things. Once again, Adam with FCOJ-A Futures in Chicago. Please keep in mind that there is substantial risk in futures trading, and it is not suitable for all investors. Have a great afternoon.